Hello my fellow investors, and welcome back to another stock analysis video as well as earnings report for the company, guys, NextEra Energy. Now, they did have earnings as of the 25th of January, and unfortunately I couldn't get to it when that happened, but I would like to get to it today because I personally do like this company a significant amount. So I really would like to take a look at the earnings and see if the current share price, this is looking like a buy. So as I said, let's get started with this analysis. All right, guys, coming over here, just seeking Alpha's earnings snapshot, we got the EPS normalized actual came in at 51 cents, beat by 2 cents. EPS gap actual missed by 9 cents, came in at 76 cents, and revenue $6.16 billion, which missed by $409.74 million. And before we actually move on to their actual earnings report, I need to show you guys something that made this company's stock tumble on day of earnings, and it wasn't just because their earnings missed. Take a look at this, guys. NextEra Energy could be headed for its lowest close in 3 months, 8.2% down, and in Wednesday's trading after Q4 EBITDA missed Wall Street estimates, and the head of its Florida power and light utility was retiring as the company refuted allegations it violated campaign finance laws in the state of Florida. So yeah, guys, they make money from two separate things: FPL, which is the Florida power and light utility, and they also make one from another part as well. We're gonna see that in the earnings report, but it did fall a significant amount, guys. So this might actually serve as a pretty good buying opportunity because, I mean, allegations of like federal campaign lawsuits, that's not something that is going to be detrimental for a company long term, in my personal opinion. So, you know, if it's just a one-off thing and the stock price falls, but their fundamentals are still looking like it's really good, this might actually serve as a pretty good buying point for this company. So coming into their actual earnings report, and like always, this will be linked in the description below if you guys would like to read it. NextEra Energy reports fourth quarter and full year 2022 financial results. NextEra Energy delivers strong full year 2022 financial and operational results. FPL continues to focus on delivering an outstanding value proposition of low bills, high reliability, outstanding customer service, and clean energy solutions for its customers. NextEra Energy Resources, which by the way, this is the second one that they get their revenues from, like they actually make money from, NEER, NextEra Energy Resources, has a record year of renewable originations, signing more than 8,000 megawatts of new projects and extend its overall development expectations through 2026. Driven by long-term growth visibility for low-cost renewables, NextEra Energy extends long-term growth outlook by an additional year through 2026. It continues on to read, NextEra Energy today reported 2022 fourth quarter net income attributable to NextEra Energy on a GAAP basis of $1.522 million or 76 cents per share, compared to the $1.204 million or 61 cents per share for the fourth quarter of 2021. All right, that's really good. That's a pretty good increase in my personal opinion. On an adjusted basis, NextEra Energy 2022 fourth quarter earnings were $1.011 million or 51 cents per share, compared to the $814 million or 41 cents per share on the fourth quarter of 2021. So they're increasing at a pretty good rate when it came to this fourth quarter 2021 and fourth quarter of 2022. And looking at this on the full year, we could see that on a GAAP basis for 2022, they did $4.15 billion or $2.10 per share, compared to the $3.57 billion or $1.81 per share in 2021. And then on an adjusted basis, they did $5.74 billion or $2.90 per share, compared to $5 billion or $2.55 per share in 2021, which represents year-over-year growth in adjusted earnings per share of approximately a whopping 13%, guys. That's absolutely insane. And taking a look at some of these numbers, guys, we could see that in December 31st, 2022, they did $6.16 billion in operating revenues. Compare this to 2021, they did $5 billion in operating revenues. And when it comes to the other metrics, they pretty much explained it up there, but nonetheless, they did very good when it came to this overall change year over year compared to 2021 and of course 2022, and they are still seeing a pretty good outlook in the future. And in fact, we actually got this right here. Driven by low-cost renewables and significant growth opportunities at both FPL and NextEra Energy Resources, NextEra Energy today reaffirmed its long-term financial expectations for 2023 through 2025 and introduced its expectation for 2026. For 2023 and 2024, NextEra Energy continues to expect adjusted earnings per share to be in the ranges of $2.98 to $3.13 and $3.23 to $3.43 respectively. For 2025 and 2026, they expect to grow at 6 to 8% off the 2024 adjusted earnings per share range. This translates to a range of $3.45 to $3.70 for 2025 and $3.63 to $4 on the dot for 2026. NextEra Energy also continues to expect to grow its dividend per share, which is, again, as a dividend investor, we like this, at roughly 10% rate per year through at least 2024 off a 2022 basis. That right there, guys, is absolutely awesome, especially when it comes to a dividend play. So now let's actually come over here and see what we should be paying for this company. We got the ticker symbol for NEE, market cap of $151.8 billion, a PE of 36.46, with a current share price of $76.40. Now, as we did see, this share price has fallen ever since they came out with earnings. It did fall at around like 8% or so. On the 1 year, they're only up, guys, 5.2%. Year to date, they're down. Take a look at that, 8.86%, almost 9%. You can definitely see that they did tumble right here, right on earnings. Boom, they went from $83.90 to $76.59. 52-week range is $67.22 to $91.35. We are pretty much like in the middle of this 52-week range. They do pay out a dividend of $1.70, which based off of their current shares outstanding, they pay out $3.4 billion. And looking further into this dividend, this is a current yield of 2.22 with no payout ratio, unfortunately, a 5-year CAGR of almost 11.6% with 27 consecutive years of dividend payment. Ex-dividend date passed as of November 23rd. Payout date was on the 15th of December, and they pay their dividends quarterly. So now let's actually take a quick look at their fundamentals, starting of course with the net income 5 years ago of $6.64 billion to today, guys, of $4.15 billion. That is a decrease of 37.5%. However, take a look at this. COVID now, guys, here is 3 years ago, which was their lowest point. So taking a look at this, going from 3 years ago to essentially today, which by the way, 1 year ago and the current one, the reason why they're the same is because it's taking it from 2022. So from COVID lows to today, they are pretty consistently increasing. Now, from 5 to 4 years ago, they did go down, but in my personal opinion, that was pretty long ago, and pretty soon we will lose this 5-year ago mark, and at that point, we would actually be at an increasing standpoint. So that's why I'm giving this company, guys, when it comes to a net income, I actually gave it a 30%. I'm gonna increase this a little bit higher to like a 45%. I do think that they will continue to increase this net income as time progresses. Looking now at the revenue, this actually looks really, really good. We got 5 years ago of 16.73 billion to today of almost 21 billion, increase of 25%. Now, their lowest point was actually 2 years ago. However, I believe that this was the time when they got hit with the hurricane, if I'm not mistaken. Remember, NextEra Energy does also own FPL, which is in Florida, and they did get hit by the hurricane 2 years ago. I believe that was in 2021. So that's not surprising to see that they did go down, obviously, during COVID, right, 3 years ago, and then during the hurricane. But after that, guys, as of 1 year ago, they brought it back up significantly. So I gave this a 70%. Looking now at the shares outstanding, this one's actually very disappointing. They are increasing shares. However, it's not a lot, but it is very, very consistent. 5 years ago of 1.9 billion shares to today of almost 2 billion shares. There's an increase on the 5 year of 4.24%, an increase from the previous year to the current year of a little bit more than 1.5%. So I gave this, guys, a 30%. It's not a lot, 4.24% is not a lot. However, it is very, very consistent, so I gave it a 30%. When it comes into the total assets minus the total liabilities, this was looking really, really solid. They have been continuing to increase this within the past 5 years. Not a single time did they decreased it at all. And by the looks of it, they are going to continue to increase it over the next upcoming years. Average total assets is $134.6 billion. Average liabilities is $89.8 billion. Doing this difference, we get $44.87 billion. I gave this a 100%. And when it comes to the overall grade, guys, we gave net income of 45%, revenue 70%, shares outstanding 30%, and assets minus liabilities of 100%, total grade of 57%. The biggest issue here is mainly the shares outstanding. Honestly, the fact that they're increasing it that consistently is a little bit disappointing, but they are seeming to increase the revenue a significant amount. And on top of that, guys, their net income, the reason why it was that low to begin with, it was because of the fact that 5 years ago they did so much. I think that once we get more numbers into the future, I think that this would easily become like a 60 or 70% net income, bringing the total grade up to above a 70%. And now, of course, looking at the valuations for a utility company, we have to use book value per share. And doing this, guys, Seeking Alpha does this for us. We get a target share price of $19.68. This is up 10% on the past 5 years of $17.86. Looking at this from a tangible book value perspective, this removes anything that is non-tangible. This becomes $17.25, up 1% from the past 5 years of $17.02. From a valuation perspective, this is looking very, very expensive. Price divided by current book value shows this at 3.88, and in regards to the price divided by current tangible book value, this is 4.43. Remember, we want this to be closest to 1 as possible, so as it currently stands, when it comes to this company, this is looking very, very expensive. Now, does this mean that you don't buy it? I don't necessarily know, right? It really just depends as to what you guys believe this company will do in the future. They are a utility company, and the utility sector is one of the safest sectors out there. And honestly, I'm personally buying it at around like the $70 mark. I know that that's still high, but again, that's just the price that I feel comfortable buying this company at. Just because the book value tells me something doesn't mean that I'm going to follow it to a T. Obviously, investing is an art. So just because this calculator, guys, doesn't have any form of assumptions to be made, please still have it. Please see what companies you'd like to see all of their fundamentals in, and see if using book value and tangible book value, this somewhat falls within a pretty good value to buy a company at. Obviously, everything is malleable to whatever you want it to be, but this is the reason why this is not financial advice, and every investment is the present value of all future cash flow. So please have these calculators, guys. They're for free for a reason. The discounted free cash flow, this one, the reevaluation one, and the dividend tracking sheet. All of this is for free, guys. All I'm asking for in return is just like, subscribe, comment. It really does help here with the algorithm on YouTube. I've been growing the channel in a way that hopefully you guys like. I've added my friend, which does mainly technical analysis, so hopefully you guys are enjoying that. I know it can be very, very technical. That's, you know, kind of not saying much, but I know it's very, very overwhelming, right? But it really just depends as to what you like. I personally do not understand technical analysis. I prefer fundamentals, but if you guys do understand technicals and you prefer that, then, you know, you guys have videos for that as well on the channel. Again, thank you so much for the help and everybody subscribing, everybody helping grow the channel. I really do appreciate it. That's why I'm more than happy to make videos every single day and live streams in the future as well, and just give you guys more content overall. So thank you so much, and I really do appreciate all of you. So with that said, taking a look at this company in the form of a dividend, putting in $5,725, this nets you an annual dividends of $127.39. Could be a little bit better. I like to buy above 200, guys, but you can see they are planning to grow a dividend at 10% in the next upcoming years. So it might serve as a pretty good kind of buy right now. If you expect the company's share price to keep going up, you buy it right now and you get this kind of dividend increase over the next upcoming years of around 10%. That's not too shabby. All in all, when it comes to NextEra Energy, I do like this company. I do own this company, and I actually have a few puts on this company at much lower prices. So hopefully we'll see what happens with them. I don't see them going away. They're like one of the best utility companies out there. And again, the utility sector is very, very regulated, right? They're very, very defensive. So, you know, if they go down here and there over an allegation, or they just miss on a couple earnings like one quarter, I don't think that they're going to go away, guys. Utilities are essentially one of the safest sectors you can be in. But that pretty much is it for this video, everybody. Like if you like, comment, subscribe. It really does help her with the algorithm on YouTube. You guys can follow us on our new tech sites, link in the description below. So with that said, peace out, and I will see you all in the next stock analysis video, as well as earnings report.